If you're watching this video, there's a good chance that you've tried to get funded before. Maybe you've blown a couple challenges in the past, or maybe you've blown the account right before the payout stage. Or maybe even you're brand new to prop firms and just looking to do it the correct way the first time. Strategy is extremely important, but risk management is what decides whether you pass or fail an account. So I built you a step-by-step blueprint to show you exactly how to approach risk management depending on where you are in your journey right now. By the end of this video, you'll know the exact approach that best fits you, and I'm going to show you how to rig the prop firm game in your favor using backed up data. Okay, so here is the risk management for prop firms blueprint. Now, let's go ahead and dive straight into it. And you can see here that the first question that it's going to ask you is, are you profitable? And this might seem like quite a simple question to start with, but if the answer is no, what I want you to do is stop right here, because prop firms aren't all of a sudden going to make you profitable. They're just going to drain your bank account with resets and challenge fees. If your answer is no here, you need to go back to basics. You first need to focus on becoming profitable and actually finding an edge in the markets. Find the strategy that resonates with you, backtest it, and build a whole playbook around it. Luckily, if you don't know where to start, TradeZella has a full library of verified profitable strategies from proven traders, all for free and no sign up required. So if you don't know where to start, that's a great place. And the link will be the first link down in the description below. So go ahead and check that out if you're not sure where to start with finding a strategy. Now that you can obviously go ahead and take that strategy, what I want you to do is go ahead and backtest that strategy so that you actually have data to prove that you are profitable with that edge in the markets. But for now, what I'm going to do is I'm just going to assume you guys answered yes, you're profitable, and move forward with the diagram here in the blueprint. So if you did, of course, answer yes, then we can go ahead and move to the next question. And the next question is, do you have data on your trading, right? And by data, I don't mean a gut feeling. I mean, you've actually journaled your trades. You know your win rate, your average R, and your worst losing streak, because all of this is critical for what we're going to be doing here. If you don't, then obviously don't worry, because I have an option for you to take as well, but we'll be coming back to this later on in the video. So just bear with me for now on that. So let's go ahead and circle yes and dive down and see what our options are, right? So which approach should you take? There's three options here. You've got aggressive, balanced, or conservative. Now, let's start off with the conservative approach. Now, this is the method that basically has almost no chance of failing if you actually stick to it. And that might sound a little bit mad, but let me explain why. The conservative approach means risking around 0.25% risk per trade. Now, at this level, if your prop firm, say, gave you 10% drawdown, all right? So let's go 10% drawdown. That would equate to you having to lose 40 trades in a row to blow that account. Now, if the drawdown was only, say, 5%, for example, that would still mean you need to lose 20 trades in a row to blow that account. And let's be real, if you're losing 20 trades in a row, I'm not really sure you can even consider yourself a profitable trader. That's a sign you need to review your data, go back to the beginning and improve your process, or that you might possibly be in a state of tilt and you're not actually thinking correctly and following your plan. Which is why I say, if you're actually profitable, you should not fail using this method. Now, conversely, let's say you've got a 5% profit target, right? That would mean you need to make 20 R to pass. So let's work this out with a 2-to-1 system, right? With a 2-to-1 system, that means you get 20 chances in a row to lose, but you only need 10 trades in a row to win, which is why you need half the amount of wins as you do losses with a 2-to-1 system. If that makes sense, then you can see why this approach is almost bulletproof, even if you've only got a small edge in the market. So who might this approach actually be for? This is for traders that are newly profitable, and let's say, for example, you've just finished backtesting, you know, your newly profitable strategy, and you want to give it on a run on the closest thing to a live market without having to actually risk too much money. Traders who struggle with psychology and they need that big cushion because they're sort of prone to have blow-ups with their psychology and they're still trying to work on that and get that locked in. Or someone who is a little bit tight on money but still wants to trade with risking not too much money and not that much risk of actually losing it, right? It's essentially like the training wheels for prop firm trading. The danger though is staying here forever. Eventually you'll improve your confidence and move into balanced. And as I said, this method is going to be much slower and can possibly take months even to pass a challenge. And although safe might not actually be the most effective thing for your trading. So let's go ahead and move on to the balance method and see what that's about. So the balance method is essentially the steady growth approach. This one is built directly off your data, and this is where most traders will live. Around 80 to 90% of you will be using the balance method to pass your accounts. And this one has basically one simple question to ask yourself, and that is, what is the maximum number of losses you have taken in a row? All right. And if you have the data to back up your trading, you should be able to comfortably answer this, right? Just by looking at your journal, you should be able to go through and look, okay, the maximum amount of trades I've lost in a row was say 4, or like say, for example, if you're using TradeZella, just go into the reports tab and it will tell you the maximum amount of losses you've taken consecutively in a row. Because the formula for this is simple, right? It's risk per trade equals the maximum drawdown that your prop firm is giving you, divided by the maximum amount of losses you've taken in a row, and that equals your risk. So let's break this down with an example. Let's say your prop firm gives you a 10% drawdown, and your longest losing streak is 6 trades. We would obviously divide that by 6, which gives us around 1.6% per trade. That means even if you hit your absolute worst losing streak that you've ever hit before, you'll still be inside the rules and you won't blow your account. That's why it's so important to know your data. Now, let's say your prop firm only allows 5% drawdown. With that same 6 losing streak, the risk now drops to 0.8% per trade. Still safe, still pretty structured, and you're scaling your risk directly in line with your actual results and your edge. And here's the kicker, right? If your real losing streak is higher than you think, so let's say you guess it's 6, but in reality, it's actually 9, then the math doesn't work here anymore. That's why tracking your data is non-negotiable. Guessing is gambling, measuring is risk management, essentially. So who is this method for, right? Who is this actually for? This approach is perfect for traders who are going for their first payout, traders who are new to prop firms, or traders who don't want to risk failing but don't want to crawl at 0.25 either and potentially take months to pass a challenge. Traders who actually want to match their risk to their actual edge. Basically, most traders should live here. It's the sweet spot between safety and progress. And remember, the only way this actually fails is if you don't track your data properly. Your max losing streak isn't something to estimate. It's something to know, which is why journaling and backtesting your trades is essential here. Without that, you're just guessing your way into a blown account. Now, finally, let's go ahead and move on to the aggressive approach. So the aggressive approach, this is built for traders who are already profitable, have had payouts, and want to scale fast or maximize their withdrawals from the actual live accounts. Now, the formula for this one is, again, it looks something a little bit like this. So the risk per trade is your daily drawdown given to you by the prop firm, so that daily max loss limit, and we just divide that by 2. So let's say if your prop firm gives you a 2% daily drawdown limit and you're on a 100K account, that would be $2,000, right? So half of that would be $1,000. Now the idea here is pretty simple. It's essentially, if you're willing to put a big chunk of risk on just a few trades because you're very confident in your edge and you have the data to prove that your edge works and you are in fact profitable, you know, you've proven this, you've had multiple payouts before in the past, then with good discipline, you can actually hit your profit targets in just a couple days instead of taking weeks. And this approach is obviously perfect for traders that are already profitable for a long period of time. Traders who have already had various payouts, traders running multiple accounts, so losing one isn't the end of the world, and traders who are emotionally disciplined enough to not tilt after a loss. This one here is key, because also if you have another income stream, the thing is you need to be both financially and emotionally prepared to blow challenges. And this means 2 things, right? You can afford the resets without it hurting your lifestyle. If a few losses of $500 or $1,000 challenges is going to stress you out and make you trade scared, then this approach is simply just not for you. And you need to be emotionally prepared. You can actually accept the loss, shut down the platform when you need to, and come back the next day without trying to all of a sudden just win it all back and, you know, enter that make money back mode. Because this is where most traders slip. The moment you get into revenge trading mode, the entire plan collapses. Think about it. Risking 2% per trade can get you to the target in literally just 1 or 2 days, but it can also wipe you out just as fast if you don't have the discipline or the bankroll to support it. The aggressive path becomes a trap instead of a shortcut, and if you're not prepared to go down this method, things can get very expensive and very messy quickly, which is why I say only a fraction of you should even be going down this method. And it's, for those people that have already passed their challenges, have already had multiple payouts and can afford to take on this burden. Now, the upside of this, as I say, is obviously that you can pass challenges extremely quick and stack larger payouts. The downside is your margin for error is tiny. 2 bad trades in a day and you're completely done on that sense, right? So aggressive isn't just about survival. It's about speed, it's powerful, but only for advanced traders who know exactly what they're doing and don't want to waste time on challenges and would rather just pay those extra fees to basically get on the live account and then start trading more of the balance method once they're on the live account, or the conservative method. So in essence, what you need to do is basically decide what financially and mentally you can actually tolerate and choose either conservative, balanced, or aggressive, right? Now, what I want to do is circle back, because at the start I asked, do you have data on your trading? And earlier, if you answered no, I don't have data, then balanced and aggressive aren't even options for you right now. The only valid path for you is going to be the conservative option, right? And as I say, this is safe, barely any risk of failing unless you're unprofitable. And the reason I say this is because if you don't know your max losing streak, you can't size your trades properly. And if you can't size your trades properly, you're basically gambling inside the prop firm rules. That's the fastest way to keep racking up resets. So your path here is simple, right? You go to the conservative route, then you go ahead and collect data, right? Then you move to the balanced when you're ready. Now, here's the important part. The important mindset shift here is that the conservative method isn't a punishment, it's a bridge. It buys you time and space while you work on actually matters, which is proving your edge. And if you're in this stage, your number one job is simple. Collect data and prove to yourself that you can be consistently profitable over a meaningful sample of trades, whether that's on a challenge, a small personal account, or even simulated trading. The goal is to build undeniable evidence that your system actually works and you can trade it. This is basically why you need to know your real stats, your longest losing streak, your true win rate, your average R, because without those numbers, you're essentially just trading blind and kind of gambling, right? Once you've got them, you can size your risk properly and step into the balanced approach with confidence. Now, most traders skip this part because they treat trading like a quick hustle, not business. And that's why they blow the accounts. You always see these boom and bust traders going for the advanced method, thinking, yeah, I can do this, I can pass quickly, I can get a payout, all this kind of stuff. And then they end up in this hole because they don't have the data to actually back up their decisions. Conservative forces you to slow down, gather the proof, and prepare yourself for the next stage. Think about it this way, you're not stuck here forever. Conservative is just like those training wheels that let you ride steady until you're ready to push the pace. Once your data confirms that you've actually got an edge, you can then move to balanced and start compounding at a much faster rate, but still safe and still at a relatively conservative rate in comparison to your edge. If you're profitable and you've actually spent time collecting that data, and you actually know things such as your max losing streak or average R, your win rate, then you've unlocked all 3 paths: conservative, balanced, and aggressive. And whichever one you choose is completely up to your personality and your goals. And if you're not profitable at all, don't even bother touching a prop firm or a challenge account yet. It's like trying to enter a marathon when you can't even jog a mile. First, you need to backtest, find a playbook, build out a strategy, and prove to yourself that you actually have some consistency first. Because until you can prove to yourself that you can actually make some profit, all you're essentially doing with prop firms is essentially donating money to other traders that are profitable. This is how you start wasting hundreds or even thousands of dollars on prop firm challenges and actually start playing the game the right way. Getting funded, staying funded, and then stacking payouts. I hope you guys enjoyed the video, and make sure to obviously like, subscribe, and leave a comment down below. And I'll see you guys in the next one.